What is happening, crypto crew? Get ready to dive headfirst into the most electrifying updates shaking the digital asset world. The news cycle is moving at warp speed, and if you're not plugged in, you're missing out on the action. We've got game-changing shifts happening across the board, from major market movements to surprising investor strategies. Today, we're breaking down exactly what you need to know to stay ahead of the curve. First up, we're tracking the pulse of the market as Bitcoin navigates a correction, but guess what? The altcoins are starting to flex, showing incredible momentum. We'll unpack why this is happening and what it means for your portfolio. Then, buckle up because we're seeing some massive whale activity. We're talking about major players shifting their positions, and it's causing ripples across the entire ecosystem. What does this mean for Bitcoin futures and overall market stability? We've got the inside scoop. Next, get ready for a shocker as Bitcoin dips below a critical price point, triggering significant liquidations. We'll break down the numbers and explore the ripple effects on other major cryptocurrencies. And finally, we're seeing a quiet accumulation happening behind the scenes. Institutions and whales are quietly stacking sats, and our bull market radar is pinging. What does this hidden strategy reveal about the future of Bitcoin? Stick around, you absolutely do not want to miss this. Smash that like button, subscribe, and ring that notification bell so you never miss an update. Altcoins take the spotlight as Bitcoin corrects. The cryptocurrency market is currently experiencing a fascinating dynamic where, despite a pullback in Bitcoin's price, alternative cryptocurrencies, or altcoins, are demonstrating significant upward momentum. Bitcoin, which has seen an astonishing surge of approximately 600% since the start of 2023, recently underwent a correction. This downturn has, as is often the case, pulled other major digital assets like Ethereum down with it. However, seasoned analysts are viewing this period not as a cause for alarm, but as a prime opportunity for investors to explore the altcoin sector. Dr. Andre Dragosh, a well-respected figure in the crypto community, has voiced his perspective, pushing back against prevailing pessimism. He highlights that while large-scale investors, often referred to as Bitcoin whales, have offloaded a substantial $6 billion in crypto assets over the last fortnight, contributing to the recent price slide, the underlying fundamentals remain strong. Dr. Dragosh points to evolving policies from the Federal Reserve as a key catalyst for future growth. With a potential shift in focus from inflation control to employment figures, the prospect of lower interest rates could significantly boost investor confidence in risk-sensitive assets, including cryptocurrencies. Ethereum, in particular, is exhibiting remarkable resilience. There's a noticeable uptick in institutional interest, and a rising open interest in Ethereum futures suggests that major financial players are strategically positioning their capital for long-term appreciation. Analysts from Stock Money Lizards have identified the $4,190 support level as a crucial entry point, anticipating a potential rebound once a specific fair value gap is addressed. Beyond the two market leaders, a diverse array of altcoins are capturing attention due to their innovative technologies and practical applications. Projects such as Bitcoin Hyper are enhancing Bitcoin's utility through Layer 2 solutions, reinforcing its core value proposition. Solana has been another standout performer, achieving an impressive surge of over 110% since early April. This growth is attributed to optimistic liquidity expectations and a favorable macroeconomic climate, particularly as the market anticipates potential rate cuts from the Federal Reserve. Even meme tokens are carving out their niche, with assets like Maxi Doge and Token 6900 galvanizing strong community engagement and speculative interest. While these tokens may not possess the traditional financial underpinnings, their narrative-driven ascent has proven highly attractive to retail investors seeking rapid gains. Despite these positive indicators, the market remains inherently volatile, and analysts universally advise caution. Investors are encouraged to closely monitor key technical indicators and avoid excessive leverage. The overarching trend, however, points towards a more sophisticated and diversified market structure, where individual asset performance is increasingly evaluated on its own merits, rather than being solely dictated by Bitcoin's price action. But what does this mean for the average trader looking to navigate these choppy waters? Get ready, because the next story reveals how massive whale movements are creating waves across the entire crypto market. Whale activity and futures surge amid market jitters. In a compelling display of market divergence, demand for Bitcoin futures has reached an all-time high, even as the price of Bitcoin, BTC, itself experienced a notable decline, dipping to its lowest point in over 6 weeks. This robust activity in the futures market, with open interest climbing to 762,700 BTC on Monday, a 13% increase over the preceding 2 weeks, underscores a sustained level of trader engagement and a shifting market landscape. Despite a 10% drop in BTC's price from its August 14th peak, traders are actively increasing their leveraged positions, signaling a willingness to remain engaged. A significant catalyst for this recent price correction was the sale of $11 billion worth of Bitcoin by a long-dormant whale that had held its position for 5 years. The proceeds from this massive transaction were reportedly rotated into Ether, at the spot, and futures markets on the decentralized exchange Hyperliquid. This strategic capital rotation highlights a broader trend within the cryptocurrency ecosystem, where investors are increasingly diversifying their exposure away from Bitcoin and into altcoins, with a particular focus on ETH. While Bitcoin futures demand remains strong, analysts caution that this doesn't automatically translate to optimism, as futures markets inherently involve matched long and short positions. A decisive breach below the critical $110,000 support level could trigger a cascade of liquidations, given the substantial leverage currently in play. The annualized premium for Bitcoin futures currently hovers around a neutral 8%, a slight increase from the previous week's 6%, according to Levitas, CH. This metric has consistently remained below the 10% threshold, a commonly recognized indicator of strong bullish sentiment, for over 6 months. The subdued premium suggests a cautious market sentiment, even in the wake of Bitcoin reaching record highs earlier this year. Further reinforcing this neutral stance, the funding rate for Bitcoin perpetual futures has settled at 11%, a level typically observed in balanced market conditions. Over-leveraged long positions were caught off guard by the recent price correction, leading to approximately $284 million in liquidations, as reported by CoinGlass. This event not only demonstrated the deep liquidity within the Bitcoin market, even during weekends, but also raised questions about the speed and strategic execution of the whale's sale, sparking speculation about potential market timing or manipulation. Despite this volatility, analysts maintain that the Bitcoin market remains resilient and well-supported. The options market also reflects a degree of caution, with put options trading at a 10% premium over calls, indicating investor apprehension. While such fear premiums are not uncommon following significant price drops, they underscore the psychological impact of substantial whale movements on market sentiment. The observed migration of capital from Bitcoin to Ethereum and other altcoins, as noted by Gracie Lin, CEO of OKX Singapore, suggests a more selective and focused approach to crypto investing, partly influenced by macroeconomic factors like the upcoming Jackson Hole Symposium and U.S. inflation data. Analysts from Enflux and CryptoQuant describe the current market phase as a bullish cooldown. Despite the recent price dip, Bitcoin's support at the $110,000 level remains crucial for sustaining the broader bullish trend. Data indicates a drop in apparent demand for Bitcoin from 174,000 BTC in July to 59,000 BTC currently, with ETF inflows also slowing to their weakest pace since April, signaling a period of consolidation. Nonetheless, institutional interest remains a key factor, with specific assets like BNB and Hyperliquid gaining traction due to their perceived stability. Looking ahead, the $13.8 billion in monthly options set to expire on Friday could be a pivotal moment, potentially reigniting investor activity and influencing the market's direction. A sustained rally towards the $120,000 mark will likely depend on renewed inflows into spot Bitcoin ETFs and a more favorable macroeconomic outlook. The recent bearish sentiment, while significant, may represent a short-term reaction to large whale movements and broader economic uncertainties, rather than a long-term shift in market sentiment. But as these massive players make their moves, what's happening on the ground with the price action itself? Prepare yourself, because Bitcoin's dive below $110K has triggered massive liquidations, and we've got all the details. Bitcoin dips below $110K, triggering $880 million in liquidations. Bitcoin experienced a significant price correction on Monday, falling by more than 3% and breaching the critical $110,000 mark for the first time since early July. The cryptocurrency reached an intraday low of $109,450, signaling a notable shift in market sentiment and triggering substantial liquidation events across leveraged trading positions. According to data from CoinGlass, the downturn over the past 24 hours resulted in over $880 million in liquidations. This figure includes significant amounts from leveraged positions in Ethereum, ETH, with approximately $300 million liquidated, and Bitcoin BTC longs, which saw $180 million in liquidations. This sharp move erased all the gains Bitcoin had made following Federal Reserve Chair Jerome Powell's comments on Friday, which had hinted at potential rate cuts in the Fed's September meeting. These comments had previously fueled a surge, pushing Ethereum to a new all-time high above $4,869 on Friday and nearing the $5,000 mark on Sunday. However, by press time, Ethereum had retreated to trade around $4,350. Altcoins bore the brunt of this correction, experiencing even steeper declines. Solana saw a plunge of over 8% on the day, while XRP fell by 6%. Smaller tokens also suffered significant losses, with assets like Pendle, LDO, and Peng recording double-digit percentage drops, some reaching as high as 13%. This broad-based sell-off indicates that the market sensitivity to Bitcoin's price movements remains high, with altcoins often experiencing amplified volatility. The timing of this downturn is particularly noteworthy as August concludes, and traders adopt a cautious stance heading into September. Historically, September has been one of the weakest months for Bitcoin. Data from CoinGlass reveals a pattern of negative performance, with BTC closing in the red in 8 out of the last 12 Septembers, averaging a monthly loss of 3.77%. This historical trend adds to the prevailing bearish sentiment and raises concerns about potential further downside. The market's reaction highlights the delicate balance between positive macroeconomic news, such as potential Fed rate cuts, and the inherent volatility of the cryptocurrency space. While the prospect of lower interest rates is generally bullish for risk assets, short-term price action can be heavily influenced by large sell-offs, liquidations, and seasonal historical trends. Investors are closely watching key support levels and macroeconomic indicators to gauge the market's next direction. This sharp drop and the subsequent liquidations paint a picture of market stress. But what's happening beneath the surface as big players position themselves? Get ready for the next update, where we reveal how institutions and whales are quietly accumulating Bitcoin, signaling a potential rebound. Institutions and whales quietly accumulate Bitcoin amid consolidation. In a significant display of underlying strength and forward-looking strategy, both institutional investors and large-scale holders, commonly known as whales, are actively accumulating Bitcoin. This trend is evidenced by substantial increases in Bitcoin ETF holdings and significant withdrawals from exchanges, suggesting a quiet buildup of assets that could precede a major market rebound. Reports indicate that institutional Bitcoin ETF holdings surged by an impressive 64,983 BTC during the second quarter, pushing the total institutional ownership to a record $33.6 billion. This data, compiled by K33 and Bloomberg ETF analyst James Seyffart, highlights a growing conviction in Bitcoin as a long-term investment. Further analysis reveals a notable shift in who is driving this institutional adoption. Investment advisors have emerged as the largest holders of Bitcoin ETFs, accumulating 37,156 BTC in Q2, a figure nearly double the $9 billion held by hedge fund managers. Prominent institutions like Harvard Management Company have made substantial entry into the Bitcoin ETF market, acquiring a $117 million stake in the iShares Bitcoin Trust, IBIT, even surpassing their investments in traditional tech giants like Microsoft and Amazon. Similarly, Brevin Howard Capital Management significantly expanded its position in IBIT, increasing its exposure by 71% to $2.3 billion. This broad-based institutional interest spans various investor categories, including brokerage firms and banks, which also increased their Bitcoin ETF allocations. While institutional investors currently account for approximately 25% of total Bitcoin ETF assets, the remaining 75% is held by non-filers, predominantly retail investors. This indicates that although institutional demand is robust and growing, the bulk of current ETF flows still originates from individual traders. However, on the retail and whale front, activity points towards accumulation rather than selling. Data from CryptoQuant shows a decrease in the exchange whale ratio, a metric that tracks whale activity on exchanges, falling to a 12-day low of 0.43 in Q2. This suggests that fewer large holders are moving their Bitcoin to exchanges, preferring to keep it in private wallets. Moreover, mega whales and other large holders withdrew a net 20.36K BTC from exchanges, a clear signal of increased private holdings. This accumulation by whales often precedes significant price movements and can be interpreted as a bullish indicator. Bitcoin's price action has reflected these underlying dynamics. After reaching a peak, BTC experienced a pullback to around $115,000. The Binance Taker buy-sell ratio, a measure of aggressive buying versus selling, dropped to 0.95, a cycle low. Historically, readings below 1 on this ratio have been contrarian indicators, often signaling oversold conditions that precede substantial price rebounds, potentially driven by short squeezes. Despite short-term volatility, Bitcoin remains on a long-term uptrend, further solidified by the approval of spot ETFs, which have integrated Bitcoin into mainstream financial portfolios. Bitcoin now ranks among the top 6 global assets, underscoring its growing significance in the financial landscape. As institutional and whale accumulation continues, the market appears to be at a pivotal juncture, with key support levels and derivatives positioning suggesting that the stage is set for a potential recovery and renewed upward momentum. These are massive shifts happening behind the scenes, but how does it all add up in the grand scheme of things? Stay tuned for our closing thoughts, where we'll recap all the action and tell you how to stay on top of it all. All right, crypto fans, that's a wrap on another action-packed update. We saw altcoins gaining serious traction as Bitcoin corrected, massive whale movements shaking up futures markets, Bitcoin dipping below $110K and triggering liquidations, and institutions quietly stacking sats. Don't miss out on any future developments. Make sure you hit that like button, subscribe to the channel, ring the notification bell, drop a comment below with your thoughts, and follow us on all our social channels for real-time updates. We'll see you in the next one.